Hey, good morning, traders. Today is January 14th, 2015. It's 11:20, and here's your market update for January 14th. The markets are bloody red today, and that's following on kind of a weird day yesterday where the markets were up 280 points, and then they were down almost 200 points, and then they kind of finished off, and it's kind of set the tone that this is a red market, and these big money players are using the markets to sell into. And so if you look at this chart, again, this is our market timing chart. You can see that we've had 4 days in a row. This is coming on the heels of a 5-day in a row decline last week and the week before. And you could see that when it comes to this envelope that we've set up off our standard deviation, it kind of prepares us for an uptrend. And you could see it bounced up. We had some great energy in this gap. And then immediately, as soon as it got to these resistance levels, it came back down, filled the gap, and now we're coming down on some serious volume. We think the market's still very red, and we're probably headed down to this 10,200 area on the New York Stock Exchange. And the Genius indicator tried as it could, but it didn't give us a positive indication, and now it's heading back down the other way. So we think we're in for some trouble for the next few days. There might be a bounce or two here in there, but I don't think if we get any kind of I don't think we get a bounce, we're going to get it on very large volume because the Fed has stopped printing, and that's really been what's holding this market up. We've been in a bubble economy for a while. The economy's doing that well, not doing that well. Retail sales were down this morning pretty heavily. And so you're seeing that selling happen in sympathy with that. That being said, we now have another test of this envelope, which generally is we call it an oversold condition. So there's a good potential. It hit it almost exactly as you can see right there. There's a good potential for a bounce here in the next day or two, and we might get that, kind of like we got last week. But I wouldn't bank on it. We're pretty heavily down. The Dow's down about 230 points. It was just down 250 when I started the video, so it's moving all over the place. This volatility is not for the faint of heart. So the market is red, which means you should be short or you should be in cash. Don't try to be a hero and pick the bottom, because when you do that, you might get sucked into a bubble bursting and lose a lot of money. The idea is to be prudent and only buy and only sell when the probabilities, or like they say in the Hunger Games, may the odds be ever in your favor. And that's what we're trying to do, is keep the odds ever in our favor. Don't try to buck the trend and play against the odds by betting against long shots. It just doesn't work. So right now the market's red, which means don't be a hero.